Hey, what's up, my friend? Welcome back to this week's market analysis. So, can you believe it? It's already December, right? I've been talking to this microphone for almost a full 1 year every week, all right? So, it's in December, right? Time really flies, and if you've been with me, right, since the start, right? All I can say is a big thank you, right? I really appreciate it, and I'm really happy that you're walking with me on this journey. All right. So anyway, back to today's video. Right. The first thing I want to talk about, number one, is that I'm currently hosting a giveaway. Right. I'm giving away a set of trading books. Right. There are 6 books in total. Right. And these 6 books, right, are what I believe, right, the books that have created the most number of profitable traders in history. And I'm giving away all these 6 for free, right? So this is just like a draw, right? You just put in your name, right? And if you are lucky, I'll pick two traders at random to come and win the prize. So I'll share with you more details later. So that's the first thing. The second thing is well, what else about rather than this week's video, right? Just want to walk you through a couple of trading setups that I'm looking at this week, and also a trade that I'm in and is currently going against me, right? Means what they call a losing trade, right? A trade that went against my entry, and I want to share with you, why I put on the trade, where is my stop loss, and how I'm looking to manage the trade. So there's really nothing. I mean, if you ask me, there is nothing shy, to talk about my losers, right? Because I think it's quite an irony to just talk about the winners and then the losers is at the back somewhere where it's never disclosed. But the funny thing is that your losers are usually the ones that gives you the biggest lessons. All right, so losers is something that you want to embrace as a trader, right? Nothing shy, about it. Okay, so all this and more in today's video. I'll see you there. Okay, so this is the giveaway that I was talking about. Right, if you want to join, this is the link to join, right? Or I will just put a link below and you can join this giveaway, right? I'm giving away the six books, right, that created the most number of profitable traders in history. Number 1 is Reminiscences of a Stock Operator. Number 2, Trend Following. Number 3, Market Wizards, The New Market Wizards, Stock Market Wizards, and Trading in the Zone. Right, and if you're a part of my Facebook group, right, you know that recently I did a poll asking you which do you think is the top trading book that you would recommend, right? So I think a lot of you recommended number 1, number 3, and number 6. So this is the reason why I did the poll and why I've added all these books. So if you want to join this, right, this giveaway, right, is $150 in value and there will be 2 winners, right? The giveaway date will end on 23rd December and I will inform the winners on 24th December, right? All the details are here. So if you want to join, very simple, right? Who is giving away this prize? Donald Trump? Warren Buffett? No, it's Rainer Teo, okay? So enter your first name, for example, Rainer. My email is rainer@tradingwithrainer.com. Okay, I click enter and voila, you're done, right? You have entered into this giveaway, right? So you should receive a confirmation email at this point in time, right? Check your email address. If you don't receive it, don't worry, because I think there's some issue with the system where it's just not generating the email out. So if you don't receive an email, don't worry as well, because you are in this contest already, right? So don't worry about it. And if you want to increase the odds of you winning, you can share it on Facebook, Twitter, LinkedIn, Pinterest, and even share this lucky URL. This URL is unique to you, right? So you can share this, and if people sign up through this URL of yours, right, it will increase your number of entries into this contest, into this giveaway. Okay, so this is basically what this giveaway is happening, what it's about, right? And it's purposely, to be awarded near Christmas, right? So this is somewhat of like, a little Christmas giveaway, if you want to put it that way. All right, so anyway, back to this week's market analysis, right? So last week we did a broad overview of, what's happening in the global financial market. So in today's video, I just want to maybe walk you through a few potential trading setups, right? As well as a trade that I'm currently in. So the first market I want to talk about is dollar Canadian, right? So dollar Canadian, right? Always look at the big picture. What is the market doing on the higher time frame? So this is important, right? It really depends on what is your entry time frame. If your entry time frame is, say, let's say the 1 hour time frame, right? Then your higher time frame could either be the 4 hour or maybe even a daily, right? So you want to define which time frame is your higher time frame. Okay, so for me, since this is the daily time frame that I'm using as my entry time frame, I'll go on to the weekly time frame and see what is the big picture. So look at the big picture, right? If you ask me, right, the trend is, I would say overall it's still towards the upside, but things are getting a little trickier because recently we have this very steep pullback, right, taking out this lows over here, and then we can see this pretty choppy move, right, trying to grind higher. Right, if you use a trend line, right, you can actually draw an upward trend line or even a channel. So let's try that, right? You see if we can fit it in, right? This is my channel tool, right? If I just connect as many points as possible. Okay, oops. Okay. Now, why is this moving together? That's funny. I thought it should be separated. There. That's what I'm trying to do. Okay. So the way I draw trend lines or channel is that I want to, fit as many points as possible. So for this, right, I will try to get as many touches as possible. All right, so you can see over here, I got 1 touch, 2, 3, 4, 5. Okay, and one thing to note is that recently, right, price has actually broke below this area of support. All right, so for me personally, I use channel trend lines is all as a secondary. So primarily, the key thing I look for is still support resistance. To me, that is king, right? Trend lines, channels, moving average, they're all secondary, right? So bear this in mind. So you can see over here, price has, no doubt broke below this area of support, right? But my thinking right now is that there is still this possibility, right, that price may do a false breakdown and then it rally and close higher. So this is always possible, right? So this is at the back of my head right now, because if you think about that, right, it has actually happened quite a few times over here, right? We have this swing low over here, price did a false breakdown and then it rally higher. This over here, right, 2 swing lows, price broke below it and then it rally from here, right? So once again, this is another swing low that I'm seeing, or rather an area of support, price break below it, and there is the possibility of it trading higher. Okay, so if you want to think of it from an order flow perspective, what is happening is that there are traders who go short when price broke below this low over here, right? Maybe price, close below support, they go short. Stop loss maybe say somewhere above this high or this high, right? Thereabout. And what's happening is that if the market can close higher, what is happening now? What is happening to those traders who are short? Well, if you think about it, they are in the red, right? Because if you go short and the market rallies higher, you're feeling the pain, right? And if it goes higher and higher, it's going to trigger your stop loss. And in return, it will fuel further buying pressure. Okay, so this is a potential scenario that I'm looking at, right? A possible false breakdown on the dollar Canadian, right? There is no guarantee it will happen, but it's just one of the scenario that is currently, playing in my head, right? So plus we have this confluence of this channel, right, this upward channel plus perhaps a false breakdown of this support, right? So if that happens, right, say for example, just walk you through hypothetically if that happens. Say for example, I get a close higher, right, and I want to go long. I'll just go long on the next candle open. My stop loss will be 1 ATR, right, 1 ATR below this low. So it give it some buffer somewhere maybe here, right? So from here to here, entry, right, over here, stop loss is here. So this is just a rough estimate, right, on my entry and stop loss, right? Of course, in the real world, things could be really different, but I'm just, just giving you an idea on how I'll look to enter and, set my stop loss for this trade, right? Since I'm a trend follower, I typically like to trail my stop loss and to ride with the trend, right? And you can use a simple moving average like the, 20 period moving average to ride the trend, or even 50, right? Depending, how big of a trend you want to capture. All right, so this is a dollar Canadian. Another market I want to share with you, which I think is interesting, is soybean. Right, so soybean market, let's look at the big picture once again, weekly. Weekly time frame, what's happening, right? You can see that in previous years, basically, right, massive sell-off, right, from here to here. It's like, falling off the cliff, right? If you are long and you don't have a stop loss, I mean, this type of move, it will probably, eradicate account, or rather accounts, right? You can, blow up your account, put in a margin and blow up again multiple times before you even find a bottom somewhere here. Okay, so this is this is soybean. It's a commodity. This happens, regularly because of the supply and demand forces. So really, right, the lesson here is, always trade with a stop loss. All right, my friend, trade with a stop loss. So anyway, back to this chart over here. Basically, we have this bottoming sign over here. Price broke out and then he had a massive, pullback once again. So basically, from where things are right now, all right, the market seems to be, forming a bottom, stabilizing. In fact, if you look at it, it's somewhat of a head and shoulders pattern. No doubt it's a distorted one because of this spike higher, right? But if you just connect this, the highs, right, this is somewhat like an inverse head and shoulders pattern, right? So my bias for this is towards the upside. All right, so on the daily time frame, right, I've plotted my support resistance levels. You can copy them if you want. And what is interesting right now is the market, again, inverse head and shoulders. All right, common, right? It's quite a common pattern, right? If you can connect the neckline maybe somewhere to here. So what is interesting right now is that price is forming a build up over here. It's consolidating. Okay, so my take is that I want to long this market if the market can break above this highs over here, right? I want to go long on soybean. Right, and stop loss once again, right? I'll use 1 ATR below this lows over here. So this is my take on soybean. I'm looking to go long, right? I'm bullish on soybean, and if you can, trade above this high, this is my signal to get long. And one disclaimer here, please, right? I am not a signal service. I'm not a financial advisor. So whatever I share over here is just for educational purposes, right? So don't, if you don't lose money and you tell your dog, your cat, or whatever, I follow Rainer's signal call and I lost money. He's a scam, blah blah blah. Hey, come on, man. Everything here is all for educational purposes. All right, you're responsible for your wins and losses, right? If you make money, I'm not going to extort, hey, give me 50% of it. And similarly, if you lose money, right, you don't expect me to, help be responsible for your losses, right? We are all matured young adults, right? I believe you're all young at heart. Okay, so yep, that's a disclaimer out of the way. So that is soybean, right? Something that I'm looking for. And another market I want to share is Aussie Canadian, right? It's a market that I went long and it's currently going against me, but no shame in that, right? Sharing with you my wins and losses. So this is the Aussie Canadian, the big picture. Pretty much, if you ask me, it's in the range. Okay, it's in a range, and in the range market, right? I typically have no bias, so I can go either long or short, right? So where I went long is when this market, right? This is my level of support that I've drawn out, right? The market came in once, tested, rallied, came back down a second time, right? We have this false break over here where price, traded below this low but just couldn't close lower, and I went long. Right, on top of it, if you get on the 200 period moving average, right, it kind of like sweetened the deal, right, where price is coming into the 200 MA as well over here, right? So this black line is the 200 MA. So yeah, I went long over here. Stop loss, I believe it is somewhere around here, my stop loss, right? Just somewhere here, I believe. Right, so I'm still in this trade. Not too pretty. Obviously, it's going against me, but we'll see how it goes on this trade, because if it's a loss, great, I take a 1 hour loss. If it goes in my favor, I catch a trend, and maybe it could be a multiple hour gain. So this is basically what trading is all about, right? So I have no shame in sharing my losses, because I believe losses is part and parcel of trading, right? There's no point hiding your losses, because if I were to try and hide my losses, subconsciously in my mind, right, I would tend to fear my losses, right? So if I were to be public with it, if I were to be open with my losses, subconsciously I know that I'm embracing my losses. So this is why I'm willing to share. And I know that by embracing your losses, right, by keeping it small to 1 hour or less, right, it's a matter of time when you catch a trend, right, you're going to make up for all these little losses that you incurred along the way. So really, there's no reason to hide. In fact, if you are, open with your losses, if you embrace it, right, I find that it helps you with your own trading psychology when the losses does come, right? It helps you, handle it better. Okay, so really, there's no shame in losses. There is nothing to be afraid of, right? If your risk management is there, your stop loss is there, you are good to go. And I would say, you're doing the right thing. Okay, so before I end today's video, I want to share with you something, a quote by my friend Larry, whom I follow on Twitter, right? I just want to share with you here. So what he says is this. How do I write this to? Okay, this one. He says that, those who think they know what is next really have no idea. Those who know that they don't know have a chance, right? This is a very simple but powerful quote, right? Right. So those who think they know what is next, all right, really have no idea. Those who know that they don't know have a chance. So let's see. So finally, right, those who complain my handwriting is so ugly, yeah. This is something that you can't complain right now, right? This is a legitimate text. I don't know what font is this. I think maybe it's Arial or whatever. But yeah, those who think they know what is next really have no idea. Hey, where's my second sentence? Where is the second sentence? Maybe it's too long. Really have no idea. What is next? Really have no idea. Okay, let me try again. Those who know that they don't know have a chance. Right, so just in case this thing remove my text once again, let me just cut it, copy, and click OK. Yep, so basically I think there's a limit to this, but don't worry, right? Just open another one, just paste it, and there we go, right? No worries, right? Steady, right? Hold your horses. Okay, so those who think they know what is next really have no idea, right? Those who know that they don't know have a chance. So why do I like this quote so much, right? And the reason is very simple, right? How often, right? I think this applies a lot to new traders where they want to know, what is happening next, right? What they're trying to predict, what is the market going to do next? When is it going to reverse? And the problem with being too sure by knowing what the market is going to do next is that you would tend to be too relaxed with your risk management. Because after all, if the market is definitely going to reverse at point A, what will you do, right? You go all in, right? You won't even use a stop loss because you're so convinced that the market has to reverse at point A. And usually when you think that you know what is going to do next, right, you basically really have no idea what trading is all about, right? Because if you've been trading for a while now, you know that trading is all about probabilities, right? And you basically have to understand or accept the fact that you really do not know what the market is going to do at any one point in time. It can go higher from your entry, it can go lower against your entry. You don't know that, right? So this is the reason why that if you don't know what's going to happen next, what you'll do is that you'll play defensive. You will use a stop loss, right? You have proper risk management. And if you start to apply this defensive techniques, then you have a chance. Okay, so let me walk you through one example, just one quick example, and we'll conclude today's video. Let's look at soybean. So at this point in time, right, I zoom out the chart and you look at this. At this point in time, can you, so-called predict that this is, the bottom? Well, chances are is you can't, right? Chances are, if you ask me, right, there is a possibility of it, even, breaking down, and, continue trading lower. So if you are like, trader, you are like, maybe say you're a new trader and you're so confident that it has to break down, you basically go short. You don't have a stop loss because you tell yourself, look at the trend, Rainer. What are the odds that it is going to go higher from here? Right? Just look at this trend. It is definitely going down, my man. And then what happened next? Boom! Toasted, right? So this is what I mean by that quote earlier, right? Those who think they know what is next really have no idea. Okay, and those who know that they don't know have a chance. Okay, so imagine price is rallying over here right now. Price is at here. Oh, it looks so bullish, right? It has to go up forever. So you go long again. Once again, you're so sure, right? It won't reverse because, this is a new bull market. I should be long. What's the point of having a stop loss, right? That is redundant, right? And then it collapsed. So you can see my point, right? You really want to embrace the fact that you do not know what's going to happen. Okay? So before we end today's video, let's embrace this together, right? Those who think they know what is next really have no idea. Those who know that they don't know have a chance, right? So if you know that you do not know what's going to happen next, you have a proper risk management, right? You risk, say, 1% of your account, you have your stop loss in place, all right? Then yes, you have a chance, right? Because your losses are always being contained. And if you do catch a trend, right, you do ride it, right, you do have a chance of making money in the long run. Okay, so this is a quote shared by my friend Larry. I can't really pronounce his last name. It's pretty my tongue can't catch up with it, but basically Larry, right? I follow him on Twitter. Amazing guy, amazing trend follower, and this is a quote he shared recently. So that is something that I've taken from him. Okay, so that's all I have for you in today's video, right? If you have any feedback, feel free to leave it in the comment section below. Right? If you enjoyed this video, hit the like button, hit the subscribe button below, and with that, I'll talk to you soon.